before we start, let's see the content of our presentation. As you can see, we will present definition, objective, customer performance measurement, key developments, reason why CPA is popularly adopted by corporations, steps to implement CPA, advantages and disadvantages, organizations that practice CPA, and lastly, how to improve CPA. Okay, let's start with definition of CPA. What's come in your mind when I said customer profitability analysis? Okay, keep your answer and let's see you are correct or not. CPA is analysis of the revenue streams and service costs associated with specific customer or customer groups, a person, household or company that over time yield a revenue stream that exceeds by an acceptable amount the company's cost stream of attracting, selling and servicing that customer is definition for profitable customer. This clearly shows that the relationship between customer and profitability needs to be ascertained before planning which type of customer are truly profitable for companies. The best customers are believed to be the loyal ones. The loyal customers are supposed to cost less to serve. They are willing to pay more than other customers and they act as word of mouth promoter of the companies. It is believed that one sure way to earn greater profit is to win the loyalty of customers. Okay, now you know you are correct or not. Let's continue. All things that we do must have an objective, right? So, the main objective of CPE is provide organization management with the understanding of each customer profitability. Organization can do a grouping this information into customer profitability segments, allow the company to take different targeted action and strategy against different profitability segments, having as a target increasing the company's total profitability. The companies that understand which customers are more profitable will have successful managerial decisions to improve overall organization profitability. Okay, now how we can measure the customer performance? We can measure through 5 perspectives. The perspectives are market share, customer acquisition, customer satisfaction, customer retention, and customer profitability. Refer to this diagram. We can see that all 5 perspectives are related with one each other. We explain to you one by one about the perspective. Okay, the first one is market share. Market share reflects the proportion of business in a given market that a business unit sells. It can be in terms of numbers of customers or the unit volume you sold. Second is customer acquisition. Customer acquisition is rate at which an organization attracts and wins new customers. It can be number of new customers and total sales to new customers. Third is customer retention. Customer retention is tracked in absolute or relative terms, the rate at which a business unit retains or maintains ongoing relationship with its customers. Fourth is customer satisfaction. Customer satisfaction is assessed the satisfaction level of customer along specific performance criteria within the value proportion. It can be product reliability and product features. And lastly is customer profitability. Customer profitability is measured the net profit of a customer or a segment after allowing for the unique expenses required to support that customers.
Hello, I am the next presenter. This part of the presentation is the key development of customer profitability analysis. These are the development of the customer profitability analysis. First, advance in information technology. Information technology has allowed companies to improve the quality and quantity of information concerning customer profitability, including information on revenue, cost, retention, and lifetime value. Many companies have sophisticated customer profitability models and customer database. This can be designed for any type of business and to accommodate different customer characteristics. Data can be aggregated by size of consumer, size of order, service complexity, post-sale service requirements, location, or other factors. Information technology can provide detailed information and analysis on individual customers or group of customers. Next is managing customer value. Analyzing customer profitability has evolved into managing the overall value of customers. CPA now includes analyzing customer lifetime value and impact, as well as managing profitability through analysis of customer segments and margins. Customer lifetime value looks at the profitability of the customer over their lifetime. The next one is the reason why customer profitability analysis is popularly adopted by the corporation. Next, we will discuss on why CPA popularly adopted by corporation. When companies are more focused on products, departments, and location of their office, they often tend to lose focus on their customers. As a result, the companies have to sometimes bear the cost of maintaining unprofitable customers, which is detrimental to their business. The reason why CPA is popularly adopted are because, first, CPA allows companies to evaluate their customers and know how beneficial it is for them to keep the customers. Based on this value, they can decide upon the cost of serving them, or even to decide whether to continue or let them go. Second, CPA helps companies to better understand customer service activities and cost drivers. Cost driver refer to action that cause variable costs to increase or decrease for a business. Therefore, identifying what product or services is causing cost can help business to become more profitable. Third is to determine the profitability of each customer or customer category. In other words, it focuses on analyzing profit per customer rather than profit per product. Lastly, customer service encompasses all activities related to completing a sale and satisfying the customer, including advertising, promotion, delivery, billing, collection, service call, inquiries, and other customer service. This slide is the continuous from the previous slide, which is why CPA is popularly adopted by the corporation. Basically, CPA will help managers to present profitable new products and services. Second, analyze profitable customers. Third, administer each customer's cost to serve. Fourth, suspend unprofitable products, services, or customers. Fifth, change a customer's purchase mix, typically aiming to sell higher margin products and service line. Sixth, deal with discount to achieve more sales with lower operating costs. And lastly, select the types of after-sales services to provide for customers. Sufficient analysis of the company's current and potential customers' profit potential can help companies to increase profit and enhance their competitiveness.
Now we may look to the step to implement customer profitability analysis. The first step is customer segmentation. The basis for customer segmentation will differ across company and across industry. There are two basic approaches to customer segmentation. The first one is demographic segmentation. It is based on observable characteristics such as geographic area, customer age, gender, and income level. The second one is psychographic segmentation.
It is based on customer needs and behavior such as customer value, attitude, and interest. Second step is revenue attributable to each segment. Once segment have been identified, the annual revenue is calculated per segment. How this is done will be depend on the product or service offered by the company. Adjustment to the price paid by the customer for a product or service such as discount, service fee or product enhancement fee must be included to determine the true amount of revenue generated by each customer and the aggregate amount calculated for the customer segment. The third step is use activity-based costing to determine the cost attributable to each segment. The annual cost is calculated per segment. This will involve both directly attributable product or service costs and also customer costs, including allocation of overhead, marketing, sales, and distribution costs. These customer costs which are often hidden, such as quality control and inspection costs, order picking, order fulfillment, and customer ordering costs. Activity-based costing is an effective way to assign both types of costs to customers. The fourth step is analyze the profitable versus the less profitable or unprofitable customer segment. The profitable customer segment will be those whose annual revenue exceeds annual cost. As the profitable or customer segment is likely to vary from a year to year, a more accurate analysis could involve calculating profitability over the lifetime of each customer segment. The fifth step, develop strategy to maximize profit from profitable customer and reduce or eliminate less profitable or non-profitable customer. For profitable customer segment, this step involves detailed planning around the development of long-term customer relationship for increased revenue, enhanced profitability such as customer retention and loyalty programs. To address the least profitable or non-profitable customer group, two main actions are used. The first one is elimination, which is ceasing to supply this customer. This can be done by no longer marketing to this customer, changing the product or service so that it is no longer suitable or rising price. The second one is re-engineering, which is turning the least profitable or non-profitable customer group into a profitable one by either increasing revenue or decreasing costs attributable to this group or both. Example including charging additional fee for service or using differential price according to customer segment. The last step is to review the impact of the new strategies on the performance of the customer segment. The implementation of any new strategy, for example, change in pricing, cost reduction, or customer service, should be reviewed after an appropriate period to determine the impact of customer profitability. Next, we move to advantage and disadvantage of customer profitability analysis. Now we look to the advantages first. The first one, CPA can improve profitability by eliminating non-profitable customer and maximizing sales or service to profitable customer. Second, it improves strategic decision making by providing useful information for customer-related decision, including pricing, discounting, and marketing decision making. Third, it improves understanding of true costs of each customer segment, including taking into account non-production costs when determining profitability. Non-production costs can sometimes be more significant than production costs. The company can make strategy on how to make cost reduction and cost control. The last one, it provides a method of identifying customer group who are lifetime value to the company and who are worth retaining or protecting. Is 4 disadvantages of CPA. The first one is there may be practical difficulty in calculating costs attributable to each segment. Implementing ABC is often challenging for many companies. Second is difficult in calculating revenue. Company may not have the data capture system to produce an accurate estimation of customer segmental revenue and cost. Then CPA may overlook the combination of product or service purchased by customer. Customer profitability depends on the mix of product or service bought. The danger is that the analysis will be used on specific underperforming products or service and will overlook the impact of sale of other products to the customer. The last one, annual profitability, may not be representative of lifetime value. The cost of attracting and retaining a customer should be compared with the lifetime earning and not just with the customer's annual earning.
Okay, for now, let's look at the application of customer profitability analysis to the real industry organization for better understanding. Okay, we have found a research or case study on the customer profitability analysis. The case study is about a luxury hotel which used time-driven activity-based costing and customer profitability analysis for strategic planning in hotel management. Okay, the hotel is 4-star hotel which is located in Georgetown, Penang. The name of the hotel was kept anonymous as it has been used for research. The hotel experience is 70% annual occupancy rate. There are 5 steps in implementation of CPA for this hotel. The first step is segmentation of customers. For ease of planning, the customers are divided into 5 segments and customer profitability is averaged out in each segment. The first segment consists of senior and mid-level managers and executives of companies that travel for business purpose. These customers spend very little time in their rooms. They tend to use hotels, cafe at the lobby, laundry services and executive meeting rooms that are frequently used to entertain visitors. The second segment are guests that are brought in by travel agents under group tours. These customers seldom use the food services of the hotel and use the hotel swimming pool and other facilities that are free of charge for in-house guests. The third segment consists of guests who make reservations through online websites or through direct calls. They typically come and stay with family or friends and use most of the hotel's facilities such as spa, gymnasium, swimming pool, and restaurants. For the fourth segment, the guests who stay at the hotel when seminars, conferences, weddings, and other social events are being held. These guests only pay for the room rent, and their food and beverages are usually covered under the payments made for the banquet halls or ballroom. The fifth segment is focused on the walk-in customers. These customers either are brought by taxi drivers from the airport or when during the holiday season, such as Chinese New Year. The second step of implementation of CPA is calculate the revenue attributable for each segment. This table shows the annual revenue of each segment. The annual report of the hotel was checked to ensure that figures match with numbers provided by the accountants. The researcher was allowed to view the customer bills and vouchers. The third step is the using of activity-based costing to determine the cost attributable to each segment. The hotel divides its cost centers into 7 major areas. To determine the cost incurred to serve each customer, the management applies time equations used in time-driven activity-based costing to reflect the resources demands of each activity. The next step is analyzing the profitability of the customer segment. The customer segments are ranked according to the profitability. Refer to the table, we can see that the highest profit comes from the corporate clients, which is segment 1. They tend to book meeting rooms for discussions with other business visitors and also entertain people for snacks at the cafe and for lunch or dinner at the hotel's restaurants. The second highest relative profit is generated by customer segment 2, which is guests under tour package provided by agents. The hotel personnel considered this customer segment as high maintenance guests. The third highest relative profitability is generated by individuals or families that come in through online booking or direct reservations, which is segment 3. This segment also generates a fairly high revenue stream, and they use other facilities of the hotel such as tour packages and vehicles. The last step is to develop strategies based on the CPA. Based on CPA, the hotel has ramped up its marketing efforts by pursuing more corporate clients, which is segment 1. This segment of customers are easy to manage and generate substantially high amounts of profits for the hotel. The hotel recruit more marketing executives to contact and follow up with corporate clientele that need to visit the Penang area, which has a large industrial and commercial zone that attracts business travelers. Besides, the hotel is offering additional perks such as free airport pickup and drop-off services, discounts for using the banquet halls for corporate programs. Next, the management is focused on bringing in more events such as seminars, conference, weddings, and parties. This is for segment 4. The marketing team are going through event management companies and also ramping up social media advertisement targeted at this group. For the segment of 2, the hotel management decided not to make any additional invest in promotional activities to this segment because the business comes in through travel agents who are incentivized by discounts offered to them, and also they rely on feedback they receive from their previous clients. The hotel typically peruse the online booking platforms such as agoda.com and booking.com and read reviews written on TripAdvisor. Based on this analysis, the hotel was able to identify the profitability segment, which is segment 1. The management was able to identify the customer segments that required minimum effort to generate maximum profits and ensure that they did not waste their time on focusing on those that demanded more time with lower benefits for the firm. It can be proved when there is no additional investment on segment 2, 3, and 5. Lastly, the hotel is able to ramp up their marketing strategies by focusing on segment 1 and 4.
Okay, so now we can proceed to recommendation for improving customer profitability analysis. From the previous slide, we have witnessed a few problems that businesses face from the application of customer profitability analysis. So here, we would like to suggest a few recommendations for the business to improve their customer profitability analysis. First, the businesses should develop a deeper understanding of their customer. The understanding involves the basics of income, age, gender, race, or geographic location. With a better understanding of your customer, the businesses able to offer the customer with product and services that speaks directly to different customer groups and deliver on the brand promise. It also allows the businesses to concentrate on one-to-one or personalized customer marketing rather than a one-size-fits-all approach. With the advanced technology nowadays, customers are now the strongest asset. Social media has become a customer platform to discuss brands, ask questions, and raise issues and complaints. The businesses should not ignore the customer voice because every social conversation reflects the promise and potential of your brand in real time. Second, know the cost to serve component of your business. The main idea behind CPA is that by focusing more on the customer, business can improve their profitability and lower their operating costs.
The companies should examine the profitability of each transaction on a transaction-by-transaction basis. For example, the business examines the profitability of each transaction on its pocket margin, the actual profit earned after deducting all the transaction costs. It is no secret that the majority of customers want a high-quality product or service at the lowest possible price. A complete analysis of cost to serve can help the business to identify opportunity to boost their profit by changing purchasing behavior in ways that are relatively unimportant to the customer, but result in significant cost to serve savings for the business. A business can maximize which goods are likely to drive profitable on sales by examining customers' historical transaction details. Next, evolve existing customer relationship management system. As companies adopt these new technologies, it is important to drive information management across the organization. This means existing systems now can easily communicate with other software such as speech and facial recognition applications. Companies now can gain new insight from previously unimaginable sources thanks to new technologies. This will improve companies' ability to collect and analyze the data as well as gain strategic customer insight at a detailed level. However, in some cases, the main goal of CPA may not be selling a product or service at a higher price, but rather than provide a pleasant customer experience. And lastly, transform customer profitability analysis. To gain the greatest commercial benefit from CPA, businesses must transform not only their management system, but also business attitudes towards their customer. CPA also must be aligned with and implemented in parallel with the business strategy. If there is a gap between CPA's stated goals within the business and how these are actually delivered to the customer, the entire process will come to a halt. In a nutshell, we can see that the manager focuses on analyzing profit per customer rather than profit per product from the application of CPA in the business. CPA also help to shape and shift the business strategy to keep the business initiative and goal aligned. And lastly, in order to meet companies' demand, the manager must understand the benefit and drawbacks of the system first. That's all from us. Thank you. So guys, do you understand what CPA is all about?